कितने व्यूअर्स होते होंगे सर? आज कितने होंगे रजिस्ट्रेशन हमारे भैया? 32 समथिंग। और लाइव में तो और बढ़ जाता होगा।
अभी तो कल इन्होंने डाला है, सिर्फ कल दोपहर में डाला है ये आज। बस लास्ट मोमेंट पे डिसीजन हुआ कि सैटरडे को कर लेते हैं।
ये हमारा ब्रांड है, नॉर्दर्न ICI इंस्टीट्यूट ऑफ चार्टर्ड अकाउंटेंट ऑफ इंडिया।
स्टार्ट ब्रॉडकास्टिंग है।
बिस्किट का पैकेट मिला है।
दूसरे क्वेश्चन किसके ऊपर आएंगे?
क्वेश्चन आपके इस पे ही आएंगे, वो हमारे आप भी उसमें है ना, जो हमारा जो व्हाट्सएप ग्रुप बना हुआ है ना, इनको ऐड नहीं किया जी, आप चेक करना
एक बार।
अच्छा इसमें आएंगे, वो तो लड़की है लड़का बैठा हुआ आपके साथ।
अच्छा जी,
वो चिंता ना करो, आप बी कंफर्टेबल।
ठीक है, ये देखा है मैंने, फिर देखा ही नहीं ना, अभी देख रहे हैं।
Good afternoon, friends. I welcome you all in this today's webinar on new annual return on GST. We have with us our faculty CS Payal Kataria ji. I welcome her and I request her to please start her deliberation on this annual return.
पीपीटी कहाँ पे लगी?
पीपीटी लग जाएगी, आप शुरू कर दीजिए, बस वेलकम कर दीजिए, बस आप इधर आ जाइए ना,
पीपीटी ऑन कर दीजिए।
आओ जरा मैं आपको उधर दिखाऊंगा।
ये सब ओपन कर दीजिए, सबको देख जाइए। पीपीटी ऑन कर लीजिए, सबको देख जाइए। अब सिर्फ पीपीटी दिखेगी, मेरा नहीं दिखेगी, छोटा सा। फोटो दिख रही है, राइट? वो भी दिखा दीजिए साइड पे कि फोटो दिख रही है। नहीं, अभी मुझे भी विजिबल हो ना? नहीं। Okay, right. Welcome viewers. So today's topic is GST new returns. So first of all, let's discuss the introduction about the topic, like the GST new returns. You all must be aware that GST has come, or it came into picture on 1st July 2017. So now the journey till time. So it was launched in 2017, and at that time, GST returns, concept of GST return was GSTR 1, 2, 3, right? But it worked only for a month, and later on, due to the hue and cry, non-acceptance by the industry, then very soon government switched to the GSTR 1 and GSTR 3B. And they take this GST 2B out of the picture, and finally people feel relaxed. Okay, now there are only two returns, that is GSTR 1 and GSTR 3B. Because the main cause of the cry was that people were saying that okay, there are 37 returns in a year and which we are supposed to file, but they don't realize that it's only the first month. Without seeing that what are the pros and cons in future, the only perception was that there are 37 returns. That was the main cry. And that's why government took a very quick action, and only GSTR 1 and GSTR 3 survived. Now the first question. Excuse me. Sorry, I'm unable to go to the next slide. So let me check with the technician. Sorry. Excuse me. वो स्क्रीन आगे नहीं जा रही है कभी ना तो बैठिए इंट्रोडक्शन के बाद नेक्स्ट स्लाइड नहीं जा रही है क्यों नहीं जा रही थी नीचे
एक सेकंड
Sorry, again, now due to some technical glitches, we have to interrupt. I think the same technical glitches they happened with the GST, and in between they stuck. Okay, but we have to proceed. We have to learn. We have to adopt the GST, and because the GST is the very wonderful concept. I hope my viewers also agree because now you have experienced that yes, GST is a wonderful concept. But of course, I know that you must say that yes, it's a wonderful, but the implementation part is very weak. It's not strong, maybe due to these technical glitches and due to taking the GSTR2 out of the picture. So finally, GST is with us and we have to follow and we have to accept it. Right. Now question arises, of course, now you are in habit of GSTR1 and 3B. Now why there is a need for the new GST return mechanism? Because now people, they are used to it, now they are in habit of GSTR1 and 3B. Now question arises, why? Why new? The reason being, when government launched GSTR3B, they said that this is a temporary thing. This is not the permanent, right? If the thing is a temporary, then what it means that if we take the example or we take the definition of the temporary concept, temporary means the lasting for only a limited period of time, not permanent. It means 3B is not actually the permanent. And in fact, there was a fight that 3B is only a challan. It's not a return. And later on, government said, and they declare, they notify that yes, GST 3B is actually a return. It's not only the concept of the challan only, and they make it as a temporary arrangement. So first of all, the reason that 3B is a temporary, it means we have to move towards something like the permanent, right? So it's always said that don't make a bad decisions for temporary happiness. Because of course, 3B it was and it is giving actually the temporary happiness to us. But you know that this temporary happiness is actually giving a pain to all the taxpayers as well. Why? Because many people did so many mistakes, all due to the reason that GSTR2 is not in picture. Wrong availment of the ITs is there because the proper train and proper coordination between the concept is lacking. That's why mistakes they are happening. There are majority of taxpayers, they are honest, and these honest taxpayers, they did mistakes actually unintentionally. They don't have any bad intention, but due to the proper mechanism, due to the lack of proper mechanism, many mistakes they happen and people are suffering, and now even they have a fear in their mind that in future they may be showered with so many notices as well. Okay, now this is your cry, like you are not satisfied that this is not the right mechanism of GST return filing. Now there is a question of pain to government. Government is also in pain. It's not only you as a taxpayer who is in a pain, or the professionals they are in pain who are filing the returns on behalf of their clients, but even the government is also in pain. You know what's the reason behind the pain? Government pain area is depicted in the slide and this data. Now just see. Total number of taxpayers, they were in year 2017-18, the total people were 92,58,899. So approximately 92 lakh people, they were registered. Now just imagine, just soon we have just completed the whole process till GSTR 9 and 9C. Until time, 70% people they filed their return, their GSTR 9. Of course, the 1 and 3B, because unless and until you file the GSTR 1 and 3B, you can't file GSTR 9. Then out of these 12 lakh, now see this 12 lakh people, they are supposed to file their GSTR 9. And just very quickly, as on 19th February 2020, just imagine 9,67,062 people, they filed their returns. So this is a very good figure. In fact, around 78% people, they filed their returns. Now it's a very happy news for government that okay, approximately 70% people they filed, 78% filed their 9C as well. So this is quite a good figures. But now government paying area is actually the 100%. 100% here means 92 lakh people or 58,899. Why? Of course, the people who have not filed their return, these 30% people who have not filed their returns, they are also paying area because they have not filed. Government will pursue them, government will force them to immediately file their returns. Even government is seeing them as a fishy. Reason being, they find that there may be some shell companies or these are fake companies or these are some non-working companies. So there are so variety of people who are in this 30% category. So government has to take care of these people. And out of this 70% people who have already filed the returns, now government knows that majority of these people, they have actually did certain type of mistakes while filing the returns. Even government is crying that the wrong availment of the ITC. So due to the reason when they made an analysis through their artificial intelligence, through their data analytics, they found that many people, they have availed ITC wrongly. That's why the amendments in Rule 36 of Rule 4 were made. Previously, they stuck it to the 20%. Then later on, very soon, they jumped it to the 10% because government needs revenue. And all due to the wrong availment of the ITC, government revenue was decreasing. Actually, the pictures or the revenue which you are seeing every month is actually, they are not the real one. Because government knows that this picture is actually, this revenue is very high, but due to the wrong availment of the ITC, government's revenue is stuck. So it means government pain is actually more than ours. Right. Just imagine the few days this GST fraud happened and the fake invoice up to 7896 crores. It happened. Even just imagine the fraudulent ITC taken by people in this racket was 1709 crores and 23 shell companies they were involved in it. So it means it's the one of the case. And like this case, so many cases they were found by the government and the department, and now they are struggling with to find out some more cases because know the reality that there are so many wrongdoers who were actually doing the wrong practices. But the wrongdoers must be aware that GST is such a concept. It is actually chain based. So if you are doing certain mistakes or even intentional, unintentional, in both the ways, government will catch you very soon. So it's a better to honestly pay tax, try to understand the concept, and happily, peacefully file your returns. That's very important in GST. So it means the both parties they are crying. Taxpayer is crying. They want the simple returns. They want the simplification, and at the same time, government is also department is also not happy. Their workload is also more because now they are actually checking each and every point, like because their main concern is about the invoice, their main concern is about the input tax credit. So it means both of the parties they are suffering. If both of them are suffering, then what's the solution? So the solution is given by the new GST return. So I hope now you understand the background that why the GST are new returns. And once you realize, okay, the thing is beneficial for you, then definitely you will accept that, and in fact you will welcome the concept. So now let's understand the new return mechanism. Now first question arises, when it's going to be implemented? Definitely if it's going, when it's implemented. So government has notified that, okay, we will implement the new concept from the 1st April 2020. Now just imagine today's 14th. Okay, today is 14th March, and just imagine only 15 to 16 days they are just left, and we have to welcome this GST new returns. So important, knowing the new return is very important, and so that the past didn't happen again. Now, what's the scheme? What's the new scheme? How government find out the simplicity? Now, how they complete or coordinate each and every concept? So first of all, they have launched 3 types of returns. First is your Sahaj, Sugam, and Normal. So these are the 3 concepts under the new GST return filing. So I think they have borrowed the new concept, or in fact they have borrowed the names actually from the income tax returns. There also you find Saral, Sahaj, Sugam, GS, ITR 1, 2, 3, 4. Because once you see all the things together, for example, the thing which happened on 1st July, GSTR 1, 2, 3, that's why people cried. But now they divide it actually. They divide it as Sahaj, Sugam, and Normal. Now let's understand what's Sahaj, what's Sugam, and what is Normal. So first let's study and let's see what is this Sahaj. Sahaj here is in Sahaj, if you opt the Sahaj scheme or you opt this Sahaj, then it is mandatory that your aggregate turnover should be up to 5 crores. Only then you can opt the scheme. If you opt the Sahaj, then it is a quarterly return filing, right? Then taxpayer under the Sahaj, they will declare only the B2B transactions and inward supplies attracting the reverse charge only. It means if you are doing B2C business and there is only a reverse charge entries, only then you will opt the Sahaj, and moreover your aggregate turnover for the previous year should also be less than 5 crores. And these type of the taxpayers who opt the Sahaj, they cannot do the e-commerce business. Like they cannot make a supplies through actually the e-commerce operators. So, which is required to be collected under Section 52, they are not allowed, right? And again, these taxpayers, they cannot take a credit on the missing invoice as well. But of course, these taxpayers, they can make a nil rated, they can do exempted or non-GST supplies, which need not to be declared in the said return. So they need not to bother about that. And then another feature of this Sahaj is that auto-populated ITC. So here, you can't take invoice on the self-assessment. You can claim the ITC as uploaded by your supplier. Now later on I will tell you that how auto population of ITC will come and how it will be related, right? These are the brief about the features of the Sahaj. So first feature is that below 5 crore, quarterly return allowed, only B2C and reverse charges allowed, nil rated, exempted, non-GST supplies are also allowed, and your e-commerce operators, if you make a supplies through the e-commerce operator, then Sahaj is not allowed. right? These are the broad areas or the broad features of your Sahaj. Now, what's the Sahaj process? Under the Sahaj process is that first you have to fill the form annexure 1. Annex 1 is called annexure 1. What is this annexure 1? So here the annexure 1 means when the outward supplies to B2C. So in this annexure 1, you will show only your outward supplies. It is just like your GSTR1. So now you can visualize, even in the beginning you had a GSTR1. Later on also we had GST1. But now under the new concept, we will not have any GSTR1. In replacement to GSTR1, form annexure 1 is there. It means whatever supplies you will make, you will show through your annexure 1 as you are showing through your GSTR. But under this Sahaj, what is allowed, what is permissible? Only one thing is permissible, that is only B2C transactions. Inward supplies, attracting the RCM is also allowed. Then this form, they are not calling it as a return actually. They are saying these are the facilitation forms actually. So I will elaborate annexure 1, 2 and returns later on also. Here I am just giving you the brief process of your Sahaj actually, that what is the process of filing your Sahaj returns. So first you will show your annexure 1. Then 10th of the subsequent month, you have to file this annexure 1. And if you want to make any type of the amendment in your annexure 1, then annexure 1A for amendment is allowed. Because now through the experience, government has learned that to error is human. Because at the initial stage on 1st July, there was not any concept, there was not any facility to make any type of changes actually in your GST returns. And later on they realized that no, people are doing so many mistakes. That's why later on they provide certain amendment tables itself in your GSTR1. But here now they have well drafted scheme for the amendments. It means if you want to make any type of the amendment in your annexure 1, then to facilitate that, GST annexure 1A is available, right? Then the second, under the second process, what is to be done? Annexure 2. Now what's this annexure 2? It's just similar to your GSTR2 actually. So it means we can say that we can understand, or if you learn the concept of GSTR 1, 2, 3, now you will realize that okay, GSTR 1, 2 and 3, they are coming back. Because I think that was the proper system under the GST. And GST should happen actually in that process. Because under GST, 2 things, they are very important. Your invoicing is very important because your invoice will tell your tax liability. And why annexure 2 or GSTR2 is important? Because it will tell you the input tax credit. Once you reconcile these 2 things, only then the corrections or right picture of your liability will come into picture. So annexure 2, it will tell you only about the inward supplies. Now just see that annexure 1 means your outward supplies. Annexure 2 here means your inward supplies. But this annexure 2, you will not file. You will not fill or you will not put an attempt to make any changes. So there is a facility of accept, reject. Later on I will tell how these annexures they work. So everything in your annexure 2 is actually auto-populated. Because the person who is the supplier, who is doing the outward supplies, he is filing his annexure 1, he is updating his annexure 1, and on real-time basis actually he is putting a figures of outward supplies or the invoicing figure in your annexure 1. And whatever is the sale of one person actually is the purchase of some another person. It means once you, on real-time basis, you upload your invoice data through the Annexure 1, automatically the person who's receiving that transaction, who is the recipient of that transaction, in his GSTR Annexure 2, that figure will be shown. So it means you can see your inward supplies through Annexure C, right? This is to view or to take some actions. So it means in Annexure 2, you will take some actions. And you have to complete this process till the 18th of the subsequent month. Now, under the SEJ, the next process is your RET2. So this is actually the main return. When we say that it is a quarterly return, when we talk about this return, that this return RET2, which is applicable for the SEJ, it is actually will be filed on the 20th of the subsequent month when your quarter will be completed. And of course, you can also make a changes in your RET2, and the concept which is launched here now for making the amendment is the respective RET2A for making the amendments. Now next question. Now from where to make the payment? Because now you must be thinking, okay, through 3B you were previously making the payments. That was the channel, that was the process. Now how to make a payment under the new and the existing system? And there is a one separate form, that is the PMT08, and this is actually the monthly. So monthly payment will be done, and it will be done on the 20th of the succeeding month to which the liability pertains. So similarly, right now also we are filing the GSTR 3B on the 20th, and due to the technical glitches or the load on the server, so government staggered it like the 20th, 22nd, 24th, right? Now let's see how government will work, whether the Infosys will listen to the government, or they will make themselves very efficient, or they may continue the concept of 20th, 22nd and 24th. But right now they have given the date that on the 20th of the succeeding month, we will have to make the payment of returns. So it means when you are opting the SEJ, Annexure 1, Annexure 2, you have to make file. Annexure 1 is for your outward supplies, 2 is for your inwards, and the final return, which we will discuss, that what is your RET2 later on. And finally, the payment will be monthly only, because government also needs monthly payments to run the country, right? So you may be happy that, okay, it's a quarterly return, it means you are going to make a payment on quarterly basis, but the situation is not this. Government want their taxes because on monthly basis they need revenue, they have to run the country. So that's why actually they never ever deviate from this 20th. Sometimes due to certain reasons, they extend it to 2 or 3 days, max 2, 3, 4 days, but they never extend it actually to more days. So similarly, the concept is that, okay, which return is quarterly? Quarterly is your RET2, but the concept of making the payment is still monthly, right? And they don't call Annexure 1 and 2 as a returns. Actually, this is actually only the real-time basis uploading or checking. Now we will also see that how this concept is beneficial. Now let's see what is Sugam. Sahaj, Sugam is the next option available. Again, under the Sugam, the main feature is that your aggregate turnover should be less than 5 crore. Again, it is allowed only quarterly. So Sahaj, Sugam are not at all allowed monthly concept. This is only quarterly return. There is not any option that if you want to opt it as a monthly or quarterly. No. Once you opted the Sugam, it's a quarterly return. Now, hope you understand what's the meaning of quarterly here. Then, under the Sugam, one more thing is added. In SAJ, B2C transaction and reverse charge was allowed. Here, one more thing is added, that is B2B is added. Right? It means under this, If you have a B2C transactions, you have B2B transaction as well, and there is certain inward supplies attracting reverse charge, then this type of return is allowed. And again, just like Sahaj, here also such taxpayers, they cannot make a supplies through the e-commerce operators. So that's not at all allowed. And again, the main restriction under the Sahaj and Sugam, both Sahaj and Sugam, that you can't take a credit on the missing invoices. That's why auto-populated ITC is eligible, which is supplied by your supplier, which is visible in your annexure 2, only that is allowed. Again, of course, nil rated, exempted, non-GST supplies, they are also allowed under the Sugam. Now the Sugam process is just similar to the Sahaj. Again, annexure 1, of course, you will show your B2C transaction, B2B transaction, RCM transaction till 10th of subsequent month. And then if you want to make amendment, again 1A is allowed. Then annexure 2, it will be related to your inward supplies only, and it's totally auto-populated, and you have to take an action and you have to complete it next month's 18th, and your main return here is your RET3, which is applicable under the Sugam, and as it is a quarterly return, that's why 20th of the subsequent month is allowed here. And you will find that your RET3 is actually max auto-populated. That's the beauty of this concept, that you will find that your maximum return is actually auto-populated. Then of course you can make an amendment in your RET3 through your annexure 3A for the amendments. So amendments are also allowed here. Again, PMT08 is for your monthly, and monthly payment of tax you have to be paid on the 20th of succeeding month. So now you must see that in the Sahaj there was a process of annexure 1, annexure 2, RET3, PMT08. Again, there is a similar concept, and the big difference between these two is only B2B in the previous Sahaj, in the Sugam, B2B, B2C, RCM. Now, third variety is your normal. Now, thing is that what is the normal? Under normal, they have again categorized this normal return into two parts. One is your monthly and another is your quarterly. And if your aggregate turnover, it exceeds 5 crores for the previous financial year, then it will become a mandatory for you to follow the normal and monthly. That is a mandatory. But of course, if your aggregate turnover is below 5 crores, then there is an option. Either to file normal monthly, or you can file also the quarterly concept, right? Then you have an option, but above 5 crore there is not at all any option, only monthly concept is allowed. Now what's the process under normal? You must be finding that is there certain and different concept under the normal, or it has some different forms? Actually not. Even under the normal, again you have a same form, annexure 1, annexure 2, RET1 form, your PMT08 form. Now actually normal is a one complete return. All type of supplies you will show under your annexure 1 under the normal, and your inward supplies will be viewed through annexure 2. And then you will file your, if you are opting the monthly RET1 under the normal, then of course this RET1 has to be filed on the 20th of subsequent month. But of course, if you are filing the quarterly concept, then on the 20th of the subsequent month, when your quarter completes, at that time you will file the return. But again, the payment will be monthly. And now no more 3B. So what's the substitute for making the payments? And the payment is your PMT08, which will be monthly, just like your Sahaj and Sugam. Now, one appreciable thing under the new return concept is your nil returns. Filing. So the filing of nil return will be facilitated through a very unique concept through the SMS. It means it will be really very simplified thing that once you will find that you have a nil returns, then it will be very easily that very soon or later on government will tell that how actually this nil return or what type of message you will give actually on what particular number you will send this SMS. These type of information yet to be circulated by government, yet to be informed by the government. But they have informed that return filing, a very easy concept has been launched, that is through the SMS. So you must be aware the meaning of actually the nil return, because once you have even the inward and outward, if the both of the things they are nil, only then it is called the nil return. If you want to take any ITC or you want to avail any ITC, at that time this is not called the nil return, then you have to switch or you have to check or you have to file your main returns. Now let's understand these three together, because we first understand the concept step by step, that what is Sahaj, what is Sugam, then what is the normal. Actually, there is a one return. You can say, broadly you can say there is an actual 1, an actual 2 and RET form. When they put it under normal, they used to call it a RET1, under Sahaj they call it RET2, and Sugam they call it a RET3. Your complete return is actually normal. Normal is the complete one. They have actually taken few tables out of that normal. When you are the normal, you will find that all type of supplies they are available under the normal. And just to facilitate, because when you are doing only B2C business and you don't want to see all the tables and you find the return to be very lengthy, then you got worried that okay, these returns are very lengthy, although you have to put only the 0. Even then it took time actually even to fill 0. But for example, if it is only B2C, then it means only B2C column is visible to you, only one table is visible. You have to put a figure in that and return is complete. So it means the complete return is your normal, and what they have done, they have just dragged out the tables which are not relevant for the Sahaj and the table which is not relevant for the Sugam. That's what they have done. Now see, under normal, what type of supplies you can show or what type of particulars you can show? B2B supplies, B2C supplies, any type of export, SEZ, deemed exports, your even supplies through the e-commerce, all type of RCM, your domestics, RCM through the imports they are allowed here, import of goods, SEZ units and SEZ development, all type of tables, they can be seen under your normal return. So let's see the overview that how they are different, and just to take a decision that which return you should opt, whether a normal is beneficial for you, Sahaj is beneficial for you, and Sugam is beneficial for you. Unless and until you know all the three, you can't take a decision. You can't arrive at a decision that which is beneficial for you or what are the pros and cons of opting that. It means the wearing or having a knowledge of three is very essential. Okay, if we talk about the periodicity, then monthly, quarterly. Under normal, it's both way allowed. But Sahaj and Sugam both are quarterly only. No monthly concept is there. Of course, the payment of tax in all the three is monthly. So these are together we can see. Then question arises like the switching. Like from Sahaj to Sugam, if I again come back to the normal or I want to go jump into the normal in between the year. So here switching process is that if you are opting the normal monthly, you can switch over. Excuse me. So if you want to switch to option 1 is Sahaj or option 2 is quarterly normal, then what frequency is allowed? Only once in financial year at the beginning of any quarter it is allowed. For example, you are under Sahaj and you want to opt a Sugam or you want to offer normal quarterly, and then frequency only more than once in a financial year, only at the beginning of quarter is allowed. Then Sugam can switch over to your quarterly normal, and how it's allowed, or frequency it is allowed more than once in a financial year at the beginning of any quarter. And once you will in the beginning of financial year on the 1st April 2020, you will see that first they will ask you whether you will want to file. For example, if you are want to file normal, then they will ask you whether you want to file monthly or the quarter. Right? First, you have to decide the option. Just like today also, if you want to file your GSTR1 monthly or the quarterly, they ask you this question in the beginning of the financial year. Similarly, in the beginning of the financial year, they will ask you the option you want to opt, and accordingly, you can also switch. Now, the most important thing about the ITC claim, that how we can claim the ITC to just to take the decision that whether I have to opt the normal, Sahaj or the Sugam. So one of the advantage or the beneficial point under the normal, whether it's a monthly or the quarterly, that ITC is actually allowed on a self-declaration basis, and even you can claim your ITC on the missing invoicing. But in case of your RET2 and RET3, which is Sahaj and Sugam, here only the auto-populated ITC as uploaded by the supplier, only that is allowed. What it means here, for example, your supplier on a real-time basis is filing the annexure 1, he is uploading all the invoices on real-time basis, and on real-time basis you are able to see the GSTR annexure 2. And once you accept that particular invoice, now that invoice will be locked. And whatever is shown in your annexure 2, actually your annexure 2 is your input tax credit summary. Only on the basis of annexure 2 you can claim your ITC. But in case of your normal, here even if some invoices they are missing, then ITC is actually allowed. And right now they have allowed the ITC 10% criteria as per rule 36.4. So definitely that rule will continue, or let's see how they will make the further rules. But that criteria you have to follow, which is at present, and you have to follow the rule 36 sub rule 4 as well. So here you can see that there is a certain flexibility, but under the Sahaj and Sugam there is not at all any flexibility. ITC can be claimed only through the auto population, otherwise it is not allowed. Why this concept has been launched? Because many small taxpayers, they were doing so many mistakes. At least now real-time matching has been done, and the chances of claiming the wrong ITC will be reduced. That's why for the small taxpayers such type of package has been launched, and under the normal, more facilities they have given to the large taxpayers, or even to the people who are actually filing the normal return. So under this concept, the important things you have to remember is your 10th of the next month. Of course, till 10th actually you have to upload on real-time basis your annexure 1, your sale data or your outward supplies in annexure 1, and automatically on real-time basis that data will be visible to your recipient, and your recipients will actually, they will either accept, reject or keep pending options they are available to them, and they can do such type of action. And RET2 actions has been done till 18th, And of course, the payment or RUT1 has to be filed on 20th. And if you are opting the quarterly return, then 25th is the important date at the end of the quarter. And now let's see what components they are seen in your Annexure 1. Annexure 1. What type of supply? Now here I have shown the whole Annexure 1. This Annexure 1 is applicable, the component which is shown, which is visible to all of you on the slide. This is related to your normal, because normal is actually the complete. We must understand the normal, so that if in between we do certain type of transactions, then we must be aware that what type of things we have to report under the Annexure 1. So let's discuss the complete Annexure 1. This is not relevant to Sahaj and Sugam. This is the Annexure A1 component of your normal. So in Annexure 1, first of all, supplies made to unregistered people, right? Previously, even you were making for any supply to B2C, large, small, they were categorizing. In the new concept, they are not making any category of large and small, but here any supply to B2 unregistered people, you have to report under your Annexure 1, and that to be the net of debit and credit notes you will report here. Then again, all the supplies you are making to your, it means this is your B2C supplies, right? Then if you are making any supply to the registered people, so here you will not report the RCM. RCM is the next thing. And this you have to report here, registered. Then any kind of export, whether it's with or without the payment of tax, that has to be reported here in Annexure 1. Then if you are making any supply to SEZ unit, SEZ developers, again with separately you have to tell, and without separately in the next column they have given the table 3 to this Annexure 1. Under table 3 you will report all these things. Then deemed exports will be shown, and then the inward supply is the attracting the reverse charge, and that to net of the debit credit notes and the advances paid if any, you will report it here. So it means along with the outward supplies, here inward supplies attracting the reverse charge will be shown here. Reason being, your Annexure 1 is your liability. It will show your liability. You can say this is your liability ledger. This is the total liability towards the GST. You have to make a payment of this or under the RCM. That's why all the inward supplies attracting the RCM, they are to be reported in table 3 of your Annexure 1. Then again the import of services. This has to be reported here because that is also the concept like the RCM. Then again the import of services separately shown and the import of goods separately shown under this Annexure 1. Then the missing documents on which the credit has to be claimed. This is applicable for your normal return. So they have given a place for missing documents in this also. And any kind of the e-commerce transactions. If you are making any supply through the e-commerce operator, then separately you will show the e-commerce. So for this separate table under table 4 is given. So it means all type of supplies, including your RCM, including your export, imports, e-commerce transactions, all these things, they are shown through Annexure 1. And Annexure 1 is actually your GSTR1, or Annexure 1 is actually your liability, right? Now, what is Annexure 2? Because the process we have learned under the three returns, 3 concepts in fact, like Sahaj, Sugam and normal, forms, and then the payment PMT 08 form. Now let's see what are the components which will be visible to you under the Annexure 2. Annexure 2 is basically showing your inwards. For outward, Annexure 1 is there. because supply of someone or sale of someone is purchase of somebody else. So all the supplies received from the registered person, including the services received from SEZ units, all those attracting the reverse charge, it will have to be shown here. And what you have to do at this time, there are three options which will be available in the return. Option 1 is to accept, 3 is reject, or keep pending. So it means here you will not fill anything. This annexure 2 will be auto-populated. Whatever auto-population, because your supplier is actually posting or uploading the data in their annexure 1, and automatically you can see the things through auto-population in your annexure 2. You have to just take one action, either you accept it. If you accept it, then click on the accept. The moment you accept it and you click on the accept, now your transaction is locked. Right? Now you are eligible to take actually ITC on this particular transaction, because now the supplier has also accepted the liability. You have also accepted that yes, you have received this is a genuine transaction, and you also, the moment you accept, then this is locked. Now there is an option of reject, because through the experience, government has learned that many times due to the typing errors, the people type the wrong GSTN number, and once you find that okay, this you type, for example, the wrong GSTN number. Now under that particular wrong GSTN number, that entry will be reflected to that particular person, but not to the real one. So once that person will say that this type of transaction never happened in the last month, and immediately this recipient will reject that this transaction is not applicable to him, so he will reject that. And sometimes he can keep the transaction pending. If you want to understand, then you can also have the third option, keep pending, right? So that you will take the decision later on. Now the question arises, you do not take any type of action, you didn't get any time, and 10th has been passed, then what happened? Now you have to be very conscious. You must be aware that if you are not going to take any action on your annexure 2, then it is deemed to be accepted. It means it is very important for you to keep seeing, or before filing of your final returns, your RET final form, at least check what is shown in your annexure 2, because it is automatically accepted. If you are not taking any type of actions, then it is deemed to be accepted. Then the import of goods. This entry you have to put import of goods from SEZ units, and then all the ISD credit, because now this is actually the credit summary you will get. So what is annexure 2? Annexure 2 is basically your ITC summary. So certain type of the ITC has auto-populated from your annexure 1. That is now reflected, it's fine. But what about your ISD credits which are eligible? And what about your import of goods from SEZ developers or overseas on bill of entry? Actually, a few things you have to fill here. Reason being, till time they have not connected the ICE gate with the export and import entries with the GSTN, and once they will connect these two things, then definitely there will be more simplification, more automation, more auto population will come out. So it means what we have learned till time, that our outward will be shown in annexure 1, our inwards will be shown in our annexure 2, and basically your annexure 2 is your ITC summary, and your annexure 1 is basically your liability summary. And once you will match them, then actually the final payment will come out, and which you will make through your PMT 08. Now under what are the components of RET1? These components, they are related to your normal, which is complete in itself. All the entries, they are shown here. The actions or you will take under your RET which are not auto-populated, because you will find that 80% of your even RET is auto-populated. Only few of the things, they are not auto-populated, and you have to take an action or you have to fill actually that particular things in your RET1. And what is that 20% which you have to do? One thing is your advance received and your adjustments, because in case of services, as you are aware that advance received you have to report. So here you will show all the advance received, and later on in the previous old system which we are dealing currently, so we are finding the problem with respect to the adjustment. But here simultaneously they have given a two tiles to us. They have given a two points, like one is your advance received, and later on they have also provided us with the adjustments also. Then separately in RET1, you have to report your nil, exempt, non-GST item. Reason being, there is no impact of these on the taxes, because in there is not any GST liability. That's why you are not showing these transactions in your annexure 1. But of course, you have to report this. The purpose of nil, exempt, and non-GST is only for the reporting purpose. So you have to report it in RET1 form. Then here one important thing is your outward supplies attracting the reverse charge. You show your inward RCM under the annexure 1, but whatever be your outward supplies attracting the reverse charge, you have to report actually, because the liability will be paid through annexure 1. But here the corresponding showing of the outward supply which is not currently available, and that will have to be shown under your RET1. Then all the supplies of goods by SEZ to DT on bill of entry, you have to report it. Then all type of the eligible ITC during the transition from 3B to the new return, because separately they have provided this column, because the ITC which is now starting or which is available through your 3B, now this transition you will show in your RET1. Then all the provisional credits for which the detail is not uploaded by the supplier. So it means the provisional credits actually, which will not come automatically. Now here you will claim the provisional credit through your RET1. And then the supplies ineligible or sometimes a partial eligible for ITC, you have to show here, and any type of the reversals of the input tax credit, that has to be shown here, because now the available ITC will be shown, but you have to make certain type of reversals of the ITC, for example under the rule 37, rule 39, and then your rule 42, 43. So all the reversals which you are supposed to make under these particular sections, under these particular rules, you have to make a reversal of those ITC or the reversal of the things which are not actually eligible. Like sometimes there is a certain transaction and a particular amount is actually for the business and particular is actually for personal thing. So that's why you have to reverse that ITC. And the third thing which you will report here, I think this is the manual, that is the ITC on capital goods and the input services, because now the total figure of ITC will be shown. That will be auto-populated, and separately you will tell that, for example, the total IT is 1 lakh, and what is the proportion of the capital goods and what is the proportion of input services. Separately you have to show these figures. Why they are now forcing you to put this figure? Because at the time of filing of the GSTR 9 in the 2017-18, people, they also cried that why they are asked to tell separately the ITC on capital goods and input services, because they were not in habit of maintaining their data in that way. So that's why later on government said okay, fine, this thing is actually optional for you. But once you are reporting your RAT1 and you are telling your capital goods, ITC and the input services, then automatically now this figure will be auto-populated in your GSTR 9C, and you need not to bother about these two things, and they will be auto-populated later on. That's why at the initial stage they are asking you, and rest of the whole information actually will come out from your annexure 1 and your annexure 2. You have to take care of only these particular things which is contained in your first part. Now the next thing, transition from old to new return. Because I hope you understand what is the new returns, like what's actually the process, what is the concept. Basically, you have to know that there is an extra 1, 2, RET 1, 2, 3, and your PM208 for your payment. This is the whole process. Now you are very soon on 1st April 2020. Now you will face these returns and you have to file these returns, and you have to transit from your old concept of GSTR 1 and 3B to this new concept. Actually, this decision was taken on 20th September 2019 at the 37 GST Council meeting. And in this meeting, they decided that they will launch this concept on 1st April. Previously, in July 2019, once they declared that the new concept will come, at that time they said, okay, the transition will be in a phased manner. Like they tell that, okay, from October to November, December, January, in a transition manner, they were actually thought to implement it. Like first the big one will follow, then the smaller one will follow. So it was a very complicated concept, like in a phased manner they were actually suggesting. But that concept of transition didn't work. And in fact, they never launched that practically. They just informed that they will do it. But actually that thing never happened. And later on, they thought instead of launching it in some phases, now let's launch it at once, right? So all the taxpayers who are till time, they will accept it and they will file the returns as per the new concept. So don't be in myth that there is certain transition in a phased manner. No, nothing like that. At once, like the GST was also launched on 1st July at once on all. Similarly, the new thing has been launched at once on all. So it means everyone should be aware about this. Now, HSN reporting in the previous GSTR 9 particularly, people were saying, okay, HSN reporting is mandatory, then again cried, then they made it optional. But here they are saying if the HSN code up to 6 digits, you have to report. This is mandatory. If you are doing any type of exports, any type of imports, and SEZ supplies, and if your aggregate turnover exceeds 5 crore rupees, it means if you are under that category, then it is mandatory for you to report your HSN codes. Now, question arises: is it burden on us? HSN code is burden on us, or if I am a small taxpayer, there is not any requirement to report the HSN code? My viewpoint is that we must know our HSN code. Either we are a small or a big. Each and every taxpayer should know the HSN code of the supplies made by him or her. Reason being, although government is giving you the facility, but at the end they know that these big players, they will force you to tell the HSN code. There is a one data that only 7% government said that we got the revenue only from 7% of the total taxpayers, or about the 5 crores, 7% people they are in that category, right? So these are the big players. but they are taking the supplies or they are receiving the goods from the MSME sector, from the small players as well. So whenever they used to deal with this small taxpayer, they always ask for the HSN code, and without providing the HSN code, they will never accept your uh, invoices. They will not make payment unless and until you tell them the HSN code of the product, because they don't want to be in the hassle of knowing the HSN code. They want to put a burden on you to you tell you the HSN code of your product, right? So that's why automatically a big chunk of people, they come under the category to follow actually the HSN code. So even it's a wise to know the HSN code or making a habit to tell the HSN code, because if we think it in a broad way, that why these HSN codes, they are important, because many of the decisions taken by the government, many of the policies drafted by the government, they are based on the HSN codes. Like they can take a very quick decisions, because once they filter the thing on the basis of HSN code, then they're taking the right decisions. So it means there is not something bad in knowing the HSN code, and there should not be any, we should not raise any voice against following the HSN code. It's a better practice, it's a good practice to know at least HSN code. You may be dealing in a one product, two product, or three, even more. It's always wise, it's always advisable to know the correct HSN of your business, and always proudly fill the HSN code of your product. Now, why this return new concept is beneficial? This return or the new concept is beneficial because it will provide me the good vendor management. So here I'm not talking about your vendor management with respect to your contracts with your vendors or your suppliers. So here the question is with respect to the GST only. The rest of the things usually you will take care your pricing policy, whatever it be. So here the GST will provide you the management, vendor management, in the sense that in fact before the launch of this new return, if you are a big player, you should take an initiative to tell your recipients to know about the new return, because all of you are interconnected. If the one of the party is not aware about the new concept, then it will be harmful, because your amount will be stuck. Because the concept under the new GST return filing is that to upload on a real-time basis your invoicing. So here doesn't mean that you will start uploading the actual invoice. No, there's not certain concept like actual uploading of your physical invoice or scanning of your invoice. No, not at all. They want certain information, and this information they are getting through your annexure one. So whatever supplies you are doing, actually you will upload through on a real-time basis through your annexure one. Simultaneously, recipient will either accept, reject, or keep pending. The moment he will lock it or he accept the transaction, it means now both the parties, they have actually the handshake. Now you can see that once the transaction is logged, once you have a handshake with both the parties, they have the handshake, then definitely your payments are secure, your transaction is secure, you have a very authentic evidence of your transactions, right? So what's the learning or what's the outcome of this process is that now what you have to initiate, or because of the experience you had, like many people, they were struggling that supplier is not uploading the invoice, and many people, they have a problem that recipient is not making a payment. So both the parties, they have a struggle. Both the parties, they were having a problem in the current regime. But once they will follow the annexure 1 and annexure 2 and they lock the transaction, it means now the liability of supplier is there to file to pay. Now the recipient can very easily claim the input tax credit, because the input tax credit will come out of your annexure 2, which is called your summary input tax credit summary. So it means in that direction, if you think in that direction, then this new return is really beneficial for all the taxpayers, because now it will create a very authentic proof. It will give a very least chance of making any type of mistakes in claiming your input tax credits. And we should welcome this thing, because now there is a proper system, and don't feel that it's a burden on you that every time you will upload the invoice and all. You can organize yourself, you can manage the things very well. And in fact, what you can do, you can always ask your supplier that first you upload the invoice. The moment you upload the invoice, I will make a payment, and then immediately the supplier should ask the recipient to lock it. So mutually, you both of the parties, they can take an action and they can make themselves secure. So now your input tax credit is not at stake, at any harm, and both the parties, they are secure, and there are least chance of making any type of wrong availment of input tax credits. Most important thing which will happen in your GST, one thing is your invoice making is the most important thing. Excuse me. So one thing is the invoice making. One is the invoice tracking. It means additionally what you have to do. So I think we should not look this new concept as a burden or the increase in the work. But of course, now you will be streamlined, you will be well organized, you will be well managed through this concept. And the whole GST actually revolves around the invoice only of the GST. So it means all the invoice related to your supplies, all the invoice related to your purchase, all the sale and purchase invoice, they are very important for you. You should have a correctly make the invoice. There should not be any error. Please follow all the principles told by the GST Act. Follow the principles mentioned in section 16. So all the rules, actions which are talking about your invoicing, input tax credit, they should be properly followed, and there should not be any chance of making a wrong invoice. And then through this new concept, invoice tracking is very important, because whatever, as a recipient, whatever invoice is coming to you, you have to take an action on it, because if you are not taking an action on it, then it will put an impact on the working capital. So definitely, to take care of your working capital, you have to do the invoice management, which is the most important thing in the GST. Whole GST revolves around the invoice only. Reporting of invoices very, very important. So you must be following certain or having some softwares which you are following or you are using. So at least now check whether your softwares which you are using, now they are taking care of your new returns, or they are customized. Now at least now you should put an effort to customize your software, so that these softwares, they provide you the facility actually for the proper tracking of your invoicing system. That's very essential in the new system. So under the invoice management, how what type of invoice trackings you will have to do. One thing is your missing invoice. This can be exercised by recipient for invoice or debit notes which have not been uploaded by supplier, and on which the recipient has availed the input tax credit. So you should have a proper record of your missing invoice. You have to take a proper action on it, because now you have taken an input tax credit on this under the normal type of return, because this missing invoicing they are allowed under your normal, not under the Sahaj and the Sugam. Then through RAT2, the pending invoicing, it can be exercised by the recipient for invoice and which are uploaded by the your supplier. Then again, obviously the reject invoice as informed, sometimes there are mistake in the invoice, and at that time you can reject. Now question arises that this power of making any type of the acceptance rejection is only with the recipient. So once the supplier upload the invoice through an extra one, then he lost all the powers unless and until the recipient rejected, and once he will reject it, then again it will be visible to the supplier. Otherwise, the moment the recipient, for example, now the next thing is the locked invoice. Now, locked invoice here means the handshake between the recipient and the supplier. It means you both agree that we made the supply and you received the goods. And the moment you receive the goods, it's your liability to make the payment to the supplier, and it's the liability of supplier to pay your tax. So it means now this transaction is complete the moment you lock it. So to make any change in this law thing, now supplier has not at all any power actually to make any changes unless and until recipient will provide you. Only the recipient has actually the power. The supplier has no more power. But of course, if, for example, supplier has uploaded the invoice, but till the time, till the 10th, he has not taken any action on it, then you have a power to make certain changes. But once he has taken an action, then you have no actually power to make any type of changes in that. On at that time, the all powers will go to the recipient, because an action 2 is applicable. It is in the hand of your recipient only. Then there is a concept of deemed blocking of invoice. As I told you that if you are not taking any type of action in your annexure 1, annexure 2, then if you're not taking any action, then it will be deemed as accepted, and then you will not be able to take any action, you will not be able to do anything on it. Now any type of question if you want to ask, I can check it. एक मिनट, ये कह रहे हैं जैसे साउंड बहुत आ रही है. अब तो हो गया सेशन. I have not checked it actually. Okay, if you have any query, and of course you can ask, and you can WhatsApp. If you it's not audible to you, then of course we can reply it on the WhatsApp, and I will reply you. And if any question, then please ask. Okay, I have just checked that some people, they are facing a problem with respect to the sound which is coming from outside. I have just checked that. So if any question, if you have any question with respect to the new returns, we are happy to take the queries, and you can even text the queries. I will also reply on the WhatsApp. Can you stop करने के लिए?
Use sound.
So one of the person, he asked the question that the applicability of GST or this new returns. The question is that is new return is applicable for March 20 as this is filed in April 20. So actually, whatever transactions they will happen in the March, they will be reported in the next month. So all the transactions with respect to March, they have to be reported in the month of April. All the transaction, not the March year. Any transaction which will happen with effect from 1st April 20 till 30th April 20, they need to be reported as per the GST new returns through Annexure 1, 2 and RET forms in the next month. In the following month you have to report, and the next month is May. So definitely in the May you will report the April transactions. And the transactions which are actually happening in the March, that you report or you pay the taxes against these in the next month, that is 20th of next month. So it means all the March transaction, they will be as per the existing system, but all the transaction which will begin from April 1, simultaneously you have to report through Annexure 1. For example, if there from 1st April 2020 new concept is launched, any supplies you are making on, for example, 2nd of April or 1st of April itself, any supply you will make on 1st of April, you will report it through Annexure 1. And next month is your May. On 20th May, you will file your, if it is a monthly, then you will pay a tax in PMT 08 on the 20th. And if it is a monthly normal, then definitely RET 1 form will have to be filed on the 20th of May. Now the next question is, Sahaj and Sugam are quarterly return, where we have to file Annexure 1, RET 2. We have to make payment monthly. Is it so? Actually, Annexure 1 and Annexure 2 are not at all any type of the returns. These are real-time transactions which you are reporting. On real-time transaction, for example, if I make a supply on 2nd of April, immediately what I can do on a real-time basis, immediately I can report or I upload or just give a detail of this particular transaction. For example, this is B2B transaction, and this transaction I can report in my Annexure 1, right? It's a real time. This is not any type of return. It doesn't mean if you are not filing your Annexure 1 or you are not completing your Annexure 2, then there is certain penalties or something like that. But here the point is that monthly payment is mandatory. Under Sahaj and Sugam, it is because the quarterly. So monthly payment on the next following month, 20th, it is mandatory. So that's why I also suggest, or it's my personal opinion, that we should adopt or we should follow actually the normal monthly. And later on you will realize, yes, normal monthly is the best option to opt by all, because government has to give the facility. They are just giving a facility, because if they will not provide us this separate type of things, this type of package, they had a fear people will again cry. If they just provide one thing, okay, this is the monthly you have to give, again people will say, no, this is a burden on us or something like that, because their main revenue is coming from that 7% people. So that's why they have put these 7% people under normal monthly. They have to file their returns monthly. They have to pay a payment of monthly. But I think there is not any harm for the rest of those people, rest of the 93% people, to file normal. Because as a professional also, for example, if you have a variety of clients and you are a chartered accountant and you are filing a return for the various of your clients. And someone is opting Sahaj, someone is opting Sugam, and someone is under the normal. And in between, for example, he said that, okay, I opted, for example, the Sahaj, only B2B, only B2C is allowed. And later on, he did some B2B transaction also. It means it's an additional hassle for you, then again switch to the Sugam, or again switch to the normal, or again coming back from the normal. So every time taking a decision, and moreover, the rest of tables will not be visible to you. So it means now you are open to do any type of business, whether it's export, import, SEZ, any type of B2B, any type of B2C. It's no question of actually thinking. And one of the important thing is that because the payment is monthly, if I'm putting all levers to know my net liability, to know my ITC, to know my payments, that will come from annexure 1, 2 and RET form. So then what's the harm in filing the RET form? Because you have to put a labor in filing, or you can say put a labor in annexure 1, you have to put a simultaneous or monthly based labor in annexure 2. These are two monthly efforts. Then why to escape from RET1 and why to put it as a quarterly? Let's make it monthly, because you must know the monthly RET. Only then you can correctly compute your tax liability and you will have to make a payment. Because in all the three categories, monthly payment is mandatory, that too on the 20th of the normal month, which we are following these days also. Let's see whether they will continue it as a 20th, 22nd, 24th, which they recently launched. But it's my totally personal suggestion that we should follow a monthly normal. It's a beneficial for all. Because now ITC, someone is asking question related to ITC. Actually, ITC will come out from your annexure 2. And these type of things, they are happening on real time basis. And every time you will concentrate on your sale and purchase bill to secure yourself, to secure your input tax credit, you will always ask your supplier to upload the invoice. And the moment he will upload, immediately lock it. Now that your transaction is locked, once transaction is locked through annexure 2, your ITC is visible on it. Right? But now the question arises that, for example, he is only uploading the invoicing. Right? But he's not making a payment of return, filing the return. Supplier is not filing the return. Then what? Because the payment of tax is not come to incumbent exchequer. So here also the government, as in current scenario, they are also saying that, okay, you file, if you are not filing your GSTR 3B for the continuous period of the 2 months, then they put a restriction on your filing of your further returns, right? So similarly, action will be taken against those people who are just uploading the invoicing, but they are not filing the returns for the maximum time period of 2 years. So the action will be taken against those type of people. It means this new concept is going to actually secure your input tax credit and the chances of least mistakes. Now see, one question is that how to choose, someone has asked the question, how to choose Sahaj, Sugam, and like how to claim the ITC. So I again saying that choosing among, like for example, your client or you as a taxpayer is doing only B2C transaction, only B2C transaction. You never did any B2B transaction. In that scenario, just go for, I think, Sahaj. Sahaj is best for those people whose turnover is less than 5 crores and who are doing only B2C transaction and they never think of doing any B2C transaction, right? Only those people can to this Sahaj. Reason being, there is no any question of the ITC for them. They are making only the final sale. They are doing only the B2C transactions, right? And your input tax credit, it will come out only from your annexure 2. Annexure 2 is basically your summary of an ITC. Reason being, what is uploaded through your annexure 1 by your supplier, it will be auto-populated in your annexure 2. So whatever is shown in annexure 2, on the basis of that only, you can take the input tax credit if you are opting the Sahaj and Sugam. But of course, if you are opting the normal, then additional facility is given to you or no restriction on you to claim the input tax credit on the missing invoices. For example, your supplier has not uploaded the invoice. You have an invoice in your hand. At that time, actually, you can claim the invoice, you can claim the input tax credit on the missing invoicing as well. And even if you are not, if you want something more, then definitely you can text through this WhatsApp group, and we will resolve your queries. Okay, now the next question is any change for existing composition dealers? Actually, this type of new returns is only for normal taxpayers, not for the compositions, and it's not applicable on the composition scheme. The scheme which is followed currently, your GSTR4 CMP form, that will be applicable. So this scheme is actually, this new return is not applicable on your composition scheme. Till time this is. So someone is asking that how annexure 2 will get uploaded after filing annexure 1. So this is a real time. Just imagine this is a near and real time. Near real time here means the moment you fill your annexure 1, for example, now 2A, for example, your 2A, all your transactions, you claim the input tax credit on the basis of your 2A, right? It is auto-populated, but you can't take any action in 2A. It is just to view. You can just view the 2A. You can't take any action on it. Here, all the calculation with respect to your input tax credit, which is allowed through Rule 36(4), that is based on your 2A, right? Or government asks you to claim the ITC which is seen in your 2A. But that is to view only. But here, through annexure 2, which is auto-populated on real-time basis. So real-time base here means if I am a supplier, you are my recipient. If I upload any invoice as a supplier in my annexure 1, just imagine maybe in next second or in a 5 minutes, or that's why they are saying a near real time. Immediately, just imagine, immediately on 1st April, I am uploading an annexure 1. I am putting or entering some transaction, B2B transaction. I am putting your GSTN number. Just in a fraction of time, the same transaction will be visible to you in your annexure 2. It means on the basis of annexure 2, these information which is you are putting or you are locking through annexure 2, both the figures, both the details, both the information which is in these two forms, annexure 1 and annexure 2, they will be auto-populated in your main return. So here the main return is your RET. It may be 1, 2, 3, right? So that will be auto-populated in your relevant return, and you will, once you will see that the format of an your RET form, then you will find that 80% of the information is actually auto-populated. You have to just show the reversals, input tax credit reversal, and you have to show manually few of the things, only 20% of the things you have to show, and rest of the things will automatically be auto-populated in your RET form. That's why they have given a dates, like next following month's 10th. Annexure 1 must be done. 18th of next following month, Annexure 2 must have been done. The moment these two things has been done, and then RET final form, that is 1, 2, 3, will automatically upload it through this Annexure 1 and Annexure 2, and 20% of the information you will fill, then your final, this return will be ready. You know your liability, make a payment through PMT 08. No, every time there is the one question like how you will come to know about the payment. That's what I'm saying, that every month you have to calculate the liability to make a payment. It means if you are putting all the efforts to know the tax liability which you are supposed to make or to pay through form PMT08, it means all the efforts will have to be done on a monthly basis. Then why to switch it to the quarterly concept? Then very soon you will realize, okay, actually it's a eyewash to provide us a Sahaj Sugam. If you are a big player or a medium type of player doing B2B, B2C transactions, and you want to take the facility of missing invoice, then I always suggest the normal monthly is beneficial. And of course, why government said I don't critically condemn Sahaj actually, because as per the government data, GSTN has given a data that approximately 70% of the people, taxpayers, registered taxpayer, they are doing B2C transaction. It means it is a facility for that segment of people who are doing only B2C transaction. Only one table will be shown to them, and they are not giving them option to for the self-assessment of input tax credit. Whatever be shown in their annexure 2, that is logged, and on the basis of that only ITC will be taken, which is auto-populated. It means you need not to apply your mind actually. Whatever it is shown, you will claim, and final payment will have to be done. So once someone is saying that, it means more or less it has become monthly return even for Sahaj and Sugam. Of course, just imagine if under Sahaj and Sugam, I just have to tell my B2C or both B2B and B2C under Sugam, and on the basis of this, I will make a payment of tax on a monthly basis through PMT08, then all the information is actually auto-populated. I even need not to apply my mind with respect to the input tax credit. Everything is auto-populated. Then why quarterly? It means like opt the normal. Just forget about rest of the table. Just make a habit that this is my B2C transaction table. I will fill this, and rest of the things are zero for me. And of course, even it's a good for the professionals also, good for the taxpayer, because for example, if by chance you did certain other type of transaction, then you have to do certain switchover, right? It means instead of going into that hassles, it's better always like to follow the normal monthly. That's it. There's nothing more hassles actually. Your calculations will be perfect. Someone is asking, can we file a nil return through portal or facility available through SMS only? No, both options are available. Government is always flexible. Like that doesn't mean they will put a force on you to only fill through SMS. both the facilities they are available. You can file your nil returns even through the portal, through the SMS. SMS is just to make it's a step towards a simplification in the hands of taxpayer. That's it. Okay, someone is saying that with respect to the composition scheme, he was unable to listen to my answer for this composition scheme. That okay, let me repeat my answer. That for composition dealer, they have to follow the same practice. This new return mechanism is not at all for the composition dealers. They have to practice the things they are following now, and this is not for them. Will it have any effect on a carry forward or ITC? No, for example, if by chance you miss that, in the next month you can show your input tax credit, because now they are actually interlinking. Input tax credit is actually now the interlinking. You missed actually in the previous regime. Here it is automatically coming. Or you can take a credit on the missing invoices. So here the more auto population is there, and it will come automatically from your annexure 1 actually. So this is one of the beauty of this new return mechanism. Yes, someone is asking that input tax credit on the Sahaj and Sugam. Of course, there is a restriction. There is a restriction on claiming the input tax credit on the transaction which are actually not uploaded by your supplier. You can take a credit only on the transaction which are visible on your input annexure 2. It means there is a certain restriction, like the self-assessment which is available right now in the current regime. Now this facility will not be available under Sahaj and Sugam, but of course in normal missing invoice ITC is available. So here I would like to give one suggestion that as these returns, their trial version is available on the portal on gst.gov.in. So I recommend or suggest the viewers to at least open that trial version and make a trial on that, so that once on 1st April this return will be launched, at least you should have awareness. You know that in which column what to be filled, so that in the beginning you don't face any hassle. And in fact, if you face any problem in that, try to know the answers beforehand and try it. And with this, I would like to conclude my video, and best wishes and thank you. हो गया?